Hi there, traders, and welcome to Trade the Structure and a live recording of the trading day for today. So I did 4 trades. Two of them were on the 5-minute trading day, the breakout strategy I implement. So the first one was a loss, a 30-point loss, and then I made it back with a 31-point win. So I got the one extra point in the slippage, which covered it. And that was that all done and dusted for the strategy. And then I had one on the Nikkei and one on the Hang Seng for both winners. Now, what I'll talk through with you now is on the screen, you'll see 4 candles. The last 4 candles, I should have taken that trade, okay? Before we keep going on, that was a 5-minute chart there. You can see expanded candle. Next candle was red, come down. Next candle, very next candle after that, flush the low and then accelerate after that. So I should have taken that as soon as we started trading back through the high. I should have been looking at that 1-minute chart and actually taken that as a breakout trade in anticipation that it's going to go into those highs, those resistance zones that I've marked up. Didn't take it, and I think as you'll see a bit later on, it does turn around and roll down again. So either way, I took another trade a bit later on. Okay, you can see a bit later on, like I said, the market did fade. It sort of did that breakout. So that in yellow, the box there in yellow is what I've marked up for the 5-minute chart, was those 3 candles for the setup. And you can see it's popped out through the top side. You can actually see the setup on the 1-minute chart. So if I was watching that closely, you can see that flush and then it started to rally. So that's I love that kind of setup. It's a 3-candle setup, like I said in the previous videos. You got the red, then you got the expansionary candle down and rejected it, which made the low, and the very next green candle took out the 2 previous lows. It even took out the previous 3 highs, sorry, not lows, took out the 3 previous highs. So happy to get in there nice and early in anticipation you're going to at least tack the highs, and you get a bit of a front runner on the breakout if it's going to play out. And it did pop up, pull back, and now what we're seeing here is that retest of that high is starting to look a bit heavy. So I was thinking about jumping in because I thought it was a higher low, but you can just see I didn't quite like it. I thought it was just a bit extended on the 1-minute chart, and it was starting to get choppy. It was just after the open anyway, and when all the argy-bargy is going on with people trying to position themselves and stuff, so I thought let's just leave it for more of a prime setup. All right, what you'll see here, the market has actually backed off from those highs. Like I was saying before, it was looking a bit heavy, didn't quite like it. Now it's getting to more of a prime position for me. All right, so what you've had, you've flushed through that low, you've taken out the most recent higher low, flushed it through, but it's paused, and you can see momentum on the 1-minute chart is starting to fade, and the actual 5-minute chart is really just a pullback on the 5-minute chart. So it's starting to show some good signs, and I think it was about here I start to just dive in, knowing that my stop loss is going to be below that low. I'm happy to jump in there. There you go, and get long. So really just want to see that sort of breakout there. I want to see some more continuation because we are still holding the higher low. We've had to have a bit of a deeper correction when we couldn't get through into new highs with that second push, and that's a 5-minute chart there. So it's really just a pullback on the 5-minute chart. Back to the MAs, it's looking prime, so I feel that's a rejection candle. I'm in early enough. If it does turn out and doesn't go right, then I'm not wasting too much. I can take it out just as it takes out those lows. All right, rather than take out my stop at 419, I can take it out if it gets down to those lows, if it starts to look a bit heavy again. So all in all, I think it starts to work out pretty well. I'll just fast forward it and we'll work through that trade. All right, so we just move forward a bit, and you can see I've put in 2 limit orders there, 480 and 495, just to take some off. So I've got 5 and 5, and then there'll be 10 left after that. So I've just taken out the first limit order. I think it was at 80, so that's locked it in from, was it 59 to 80, which is not too bad. I didn't want to go, for too much on this one. I didn't really think that we could have some trouble up at these highs. Considering that the market might be looking to the US and overcooked, we might just pop up and then sell off into the close. So I wasn't really sure. As it turned out, the Hang Seng's actually gone on quite hard. So the Nikkei's gone on quite hard, a lot harder than that. So anyway, it's taken out 5 there. I think I just took out another 5, and we've got that limit order, which is at 95 now. And then I just piece out the rest of it eventually, just close it all out. So you'll see now, I think I've only got 5 to go if I'm right. But anyway, I think it just pops up into those highs. It just fails to kick on. All right, so I think I was eventually just happy to take that off. All right, it's a bit further on. Now you see I've just highlighted that's on the MACD. To me, when I start to see some red in the MACD, when it's in sort of those overbought conditions, I feel like it's just starting to lose that momentum to the upside or which way of it's going. So that's why I was a bit conscious of not hanging around. I've tightened up my stop here on the remaining. I've placed it, I think it's at 450, and I think I actually get tagged on that one. So it's just below the entry, just below the entry. It's a couple of points below, about 3 below the entry, I think. So I think I get tagged on that any minute now, and that closes off that trade. So all in all, it was, it was a good little trade. I didn't hang around, which I don't like to do that. I think if you've got a strong market, you'll be able to see it quite clearly. If it doesn't, it can chop around, so you don't really want to be sitting around in that chop, risking. Sorry, just taken off there, so that's just closed out. So you don't want to sit around in a trade risking that it reverses on you, and you can see some really good gains evaporate. I'm a big one for jumping all in and then piecing it out. And if you can let a runner go, let a runner go. All right, on to the Hang Seng trade. So you can see I'm just placing the orders in there for the opening strategy. Just ticked over there, 12:30, ready to go. I had a sell just below that low, which it basically opened and went straight up. So I had my buy entry, which I'll place in just a moment, just above that high, and get that ready. So I'm basically prepared for that extension of the highs or extension of the lows, okay, where they're going to target those stops. So that's all I'm really concerned about for that trade. And then I'll start to look at what the market's doing, start to get a read on the market, and then start to see where the big money is going to head, okay. And I want to just sort of follow the trail. So you'll see here the market actually it doesn't push down. It does a bit later, but it doesn't push down now. It's actually starting to really tick on through those highs. So it's about this stage. I'm looking at it going, I don't want to go long there, to be honest. I didn't want to take that trade, but I figure, you've got to stick to the rules. You never know what's going to happen. And you see, I think it executes any second now. Actually, it might just back off and then execute a bit later on, but the next minute. But I wasn't really too keen on taking it. I could see the way it is, and you can see how it's extended from, say, that 940 area, 930 area, all the way up. So it's about a 70, 80 point rally without a pullback. So when you get that sort of thing, it makes it hard to take a bit of a breakout trade, because you've got to ask yourself how much emphasis is left in the trade to kick on hard. At least to get you your 30 points on the Hang Seng, and when we do it also on the Dow and the DAX. I've been looking at the Tech 50, which is the Nasdaq, but I haven't really focused on that as much, so it's just a 3 for now. But yeah, when you get that sort of extension up into a level, to me, I just feel like I'm going to get flushed. Okay, so I just got in there, got 4-point slippage, I think, as well. So I had it at 10, and I got 4-point slippage on that. So that's a bit of a shame, but that's the way it is, which means I get out at slightly higher than where I was originally getting out, 84 instead of 80. But anyway, that you can see now it's trying to go up, and I think it nearly tags me here, goes back up, gets into positive territory, then turns around. Actually, it doesn't tag me, doesn't go back up. It just tagged me straight away. So you can see that it was just a flush, okay? And I was right. I didn't really want to get involved there, but I have to stick to the rules and then play the game for the statistics rather than pick and choose which ones you're going to trade. So from here, I think it starts to head down. So we'll just fast forward to that part now. So now you'll see we're starting to head back down again. So we're going for the other side, okay? And I just triggered the short trade there at 9.15, and lucky enough that just keeps going. So I don't mind if it flushes one side and I get stopped out, as in I don't get my 30 points. Then I more often than not, it's going to turn around and head down the other side and take out the other side. It's going to head in the direction, a bit more directional on that way. Okay, so most of the time I've found that if I do get my first win, that's it. I'm done for the trade. Okay, so if I get the 30 points, I'm done. If I miss out on the 30 points on the top side or the bottom side, I'll just leave the order in. I'll just keep waiting. Okay, but generally, if nothing happens within the first 5 or 10 minutes, I'll pull the pin. I don't bother, because it's like a really uncertain market. But you can see here it starts to keep going down. Well, it starts to keep going down. It keeps going down, and then it eventually trades through the profit target any minute. There you go. Just tag that. So I actually got 1 extra point on that, which is good. Which covers the loss plus another $20. So that was it. That was it for that trade. So now we'll just be looking around for what's going to happen next and try to get a read on the market. Okay, getting into the last trade, you'll see the market will just flip over. I actually had it on pause and then just press buy and then press the pause button again. So you'll see that market's flushed down from that trade where we got on the breakout. The sell, it's come back, it's flushed down, it's taken out the lows, the previous lows, and then made it this minor higher low. So I figure I was expecting more of a range kind of a day. Okay, so I was expecting that if it's going to range, I want to be sort of trying to buy the edges where I'm seeing a higher low and selling off a lower high, something like that, because I had a decent decent momentum move down yesterday. Okay, it was open, flushed up, then went straight down for the rest of the session. So I figure today probably won't there's a chance that it's not going to do that. So I was happy to buy there, considering that the 5-minute chart was also pointing up. The momentum was up, the MAs are up. So I'm really just trying to buy for high low, really trying to push into those highs. So you can see now I bought it at 925. I've got a partial at 960 and 970, which I think gets tagged not too far off from here. They get hits that locks away 5 and then another 5 out of the 20, and then really it's just playing around with those next 10. If I feel like it's going to keep going, I might make it a bit wider. If I feel like it's going to stop, I'll get out. Okay, so it's just all comes down to price action after that, managing what you've got left on. Okay, managing that risk. Okay, you'll see I've got 5 was just taken off, we just tagged then, 960, 2960, and then the 970 gets tagged. There you go, just got hit then. So I've cleared out 10 of the 20, and now I'm just sort of playing around. I'm tightening up the stop, so I don't really want to risk anything. If it's going to turn around and retrace on me, this could take out the lows and go, we've got a new lower high, and it's going to be a big move down. But if it's going to go up, it really should just keep chugging away into the highs. Okay, so I think I've just got another limit in there. I'll put another limit in there for 5, and then I've actually got my 100. So normally when I put an order, I put a 40 stop and a 100-point profit target just as stock standard, and then move those around if I need to, um, chop and change or delete the profit target or whatever I do. So they're taking off another 5, I think, and really it's just watching that because it hasn't got as much gusto as I was hoping, to be honest, and really just sort of watching that and just seeing if it starts to retrace too much, then I'll call it a day. Oh, there was the third 5, sorry. Just took off the third 5 then. And I'm just going to watch that and see if I can just leave that that last 5 to kick on a bit. But at the moment, yeah, look, it's doing okay. It's just struggling a bit. So the 5, if it's going to expand through those highs, it should just go bang, 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 you would expect. And you'll see in a moment, which we'll just fast forward it actually pauses. So here I'm just watching that 5-minute candle. I'm just waiting for it to finish. It's got about 20 or 30 seconds. There you go, 10 seconds till it closes. So I want to see that go because generally if it's going to kick on, you see the next 5-minute candle will just basically pop straight up, will extend, okay, right through those highs. And if I don't see that kind of action, like it does, it starts to pause there. It's getting sold into. There's still some sellers lingering around at those highs. So I'll go back to the 1 minute and I'll just start looking at that and go, okay, I'll tighten my stop up or I'll start to get out. Just make a decision on the fly. See, now you'll see it's only a few minutes later, but you can see that it keeps popping up new highs, gets rejected, popping up new highs. There is still some buyers around. It's about now when I start to look at it going, oh, I've got a feeling if that 5 was going to go, it should have gone by now. Instead, we're going to start to retrace the bigger candle previously, the bigger 5-minute candle previously, and I was just happy, okay, let's call it a day, I'll close it out. It turned out to be the right decision, and I think it was only later on when it actually started to creep higher. So from here, it does start to roll over. So you can see the price action is getting a bit heavy. So that what happens there is continued selling. Buyers take the foot off the pedal, and sellers start to dive in and profit take or short. All right, we'll just review the 3 markets that I was trading or was looking at anyway. With the ASX, the SPY 200, the Nikkei, which is the Japan 225, and the Hong Kong 50, the Hang Seng. All right, so we've got the Hang Seng here. We've got a 1-minute chart. You'll see at the top here. Now, where did I get involved? I got involved here, which it stopped me out. So that was that sort of flush, turned around and stopped me out and got heavy, then got short through here, bought it back on 30-point limit. So that was good. And then that third trade was just in here, okay, when it started to expand through there. All right, so you can see that was, a couple of partials in here, and I think I took some more off up here. And then as it sort of floundered around these highs, I was saying that it did roll over a bit. Now, it didn't go too far, but you can see it sort of just bouncing off those MAs and then started to head higher. I didn't like that kind of, that's the kind of thing I don't like too much when the momentum starts to fade. You want to see more of a controlled move. So when they get more controlled, you get these little pullbacks, okay, which you can work off when you've got these big extensions and then stops and extends again. It makes it harder to expect a more of a trend move. Okay, so when you've got a trend move, it's more contained or controlled, where pop up, pull back, higher low forms, new high, higher low, new high, and so on until it goes up. So you can go back and look at some charts from previously, but you'll see momentum will be relatively, flat but positive. Okay, so well for an uptrend anyway. So when I see this kind of thing, too much, it starts to pull back. Yeah, it's built up, but then you've got this momentum still fading at those highs. I don't like to see that too much either because it's just that follow through you would expect to be relatively strong. You don't really want to see these big pullbacks through the 10 and the 20 and it's down touching on the 50 EMA and it's straight back up again. It's more of just starting to chop people in and out. Now, what happened after that? You can see it did push through that low, just through here, which is fine, and then started to lift. So this is more of a prime entry for me. After that, you got these sort of candles in here, that entry through there, that's quite good. Now this, that's not a bad entry, but I'm not too keen on it. It's not the world's perfect setup for me. What I'm looking for, and like I said, the MACD was sort of heading down, momentum was fading, as according to the MACD, the way I read it, and it turned around and went straight up back up. Then it failed into the new highs anyway. You can see that did push up to the high, but failed as soon as it got through, and then backed off. So what it's actually done, the market, well, algos, whatever, let it back off, flushed out some of these longs, cleaned them out. There would have been a number of stops below that. It's quite an obvious level. Stops below, triggered it, and went straight back up again. So as soon as you see that big flush like that, something like that, we're on the 1 minute chart, don't forget, a flush like that, and it starts to bounce back again, you know that stops are going to be triggered. Anyone that's long above that probably just got stopped out and they're going to have to re-enter to buy back into the market. Or you've got shorts that have initiated a short breakout style trade that have now got it wrong and have to buy back into the market. Okay, so that's what you're looking for, because it's kind of that emphasis. So as soon as you see that flush and it starts to bounce back, then I'll be looking for a higher low, especially when you got the momentum is still, bias up. All right, so you get the MACDs are still pointing up. So they're kind of the prime trades. After that, maybe this is a bit of a short, but only because you're in sort of that overextended territory, which we've been in before. Maybe that's a short in there, but it's off a lower high. It's not a high probability trade because you're against that overall trend. But it is starting to fade into that next level at 21,100, just up here. Right, so after that, that's pretty much it. So that was the area I trade into. That was quite nice because you can see that higher low playing out. You've got move down, pop up, higher low here, and you're looking for, at the very least, just an extension of that high, and potentially it could push right up into as high as the fact that the 5 minute was actually moving. I think it was moving up. There you go. So the 5 minute was actually still biased up. The MAs are still in the right position, and you're still positive on the MACD. Is a good reason to get in, look off that higher low from the 1 minute chart. All right, especially when you see this kind of green candle, red expansionary candle rejected, the next candle rejected, and you finish the high, take the break of the high, you're going for the next candle up, basically. Okay, so this action through here was just what we're mentioning off that 1 minute candle. As soon as you got that 5 minute flush, that's where you're looking for break. Let me just clean this up a tad. That's where you're looking for the break. Basically, the high of that candle there. All right, high of that candle pushes through, and then you just got to manage your risk after that. But generally, I'm looking for those kind of setups in my 5 minute, but I'm just going from the 1 minute to refine the entries. Over to the Nikkei. The Nikkei, like I said, this is what I was going to show you, the missed opportunity, which is said in the heading. Where's my long? I think my long was here. Okay, popped up here, didn't get much out of it, and then boom. So just that leg up alone, if I was going to re-enter, that was 110 points. But that was about when I was focusing on the Hang Seng, starting to get prepared for that. So I could have taken that and made some of the Hang Seng anyway, but it was today, the market to pick was the Nikkei by the looks of it. You could have got 50 to 100 off that, where I was sort of chopping around, fighting for that. Well, I actually got 50, 60, 70 points on average on the Hang Seng, but that would have been the nice little trade. And then if you held it, with a partial, took a partial exit, you could have got in, that was a nice, that was a 5 minute setup actually. Let's just take that off. That was where I got in. Well, let's just grab these, just one sec. Let me change a few colors here. Getting in here was okay, but the real setup come a bit later on, okay? So that was a pop up, pull back. I got my higher low in place. You can see nice little RTF there, and it starts to head higher. If you took it through that high, that's fair enough. Then your risk is below. If you took it a bit earlier, just when it starts to break, then your risk can still be below that in anticipation that we're going to get through the high, which we did, expand up, and then really if you could have taken some off into these highs, if it started to fail, or maybe into this high, just let it flush through that, take it a partial on the way up. If you got some as a runner, then really you could have held that for a lot longer, maybe getting out somewhere around here. So if that was the case, you could have got something into there. It's 150 points though. All right, so that was the Nikkei. Over to the SPY. Let me just get a read on where we started. 950, that was the open. So prime entries for me would have been, even though I didn't trade this, I was more looking at the Hang Seng. Actually, I wasn't doing anything just then, just sort of preparing. But you see that's a nice zone. You got this pop up, pull back, held the low here, held a little higher low in here. And once you start, if you're looking at that, you anticipate it's going to be another higher low. It's back on the MAs and your break is the top of that box. Okay. Buy on stop first above, your risk is below, and look at expansion. And you can see it starts to fade off here. You got through this low, and then basically, a bit like we did on the Nikkei or the Hang Seng, it retested it, even flushed out this level, flushed it out with this little pop up, and then you've got another setup there. Okay, another high low, inside high low. We call it an inside continuation trade, which is ICT. That nice little setup there with the trend, and it pops up even more. Okay, so there's probably a few more after that, but they're the key ones. So if you start to get into this session, up here, to me, it starts to get a bit stretched, a bit extended. So you're getting a bit late there. The best work is done a bit earlier, especially in a trend move. You can get in nice and early, and you can read the price action properly. Then you're going to get a nice little setup, and you're going to get some follow through. Okay, as long as you can hold it through that follow through. All right, that's pretty much all I wanted to go through, guys. Now, look, I hope you enjoyed that. And like I said, we'll keep doing these live videos. I'll keep chopping them up after I've recorded them. Focus on the trading and just record it and then chop it up and put it together later on with a bit of a description of the setups and why I'm trading what and what I'm seeing in the price action. Right, so thanks for joining me. Like I said, if you like what you hear, it'd be great if you can follow us on YouTube, on the channel, and then just leave us a like. If you haven't heard of me, just look at the website, www.tradethestructure.com. There's a lot of free material on there, a bit of educational material, and a good little community for trading. A lot to learn if you're new, especially. So jump on there, have a look around, and then subscribe for free. All right, guys, thanks for joining me. Speak to you soon.